BlackRock, the world's largest asset manager, just bought over $50 million worth of ETH in only 10 days. So you know what that means. This kind of action often signals Ethereum is about to pump. And it's definitely stealing the spotlight across the entire crypto world. Ethereum's network just rolled out a Pectra upgrade, bringing faster speeds and cheaper transactions throughout the whole ecosystem. So aside from its blue chip status as the world's second most used, trusted, and popular crypto token, second only to Bitcoin, chances are that this new Pectra upgrade is another driving force or factor fueling institutional investment into Ethereum's ETFs. Long story short, ETF inflows are breaking records and long-term holders are continuing to stack more ETH every week. All of this happening while global markets are shifting. We know US debt continues to mount to new highs, all while the old financial playbook is getting tossed out. So in this episode, we'll break down why Ethereum is at the center of Wall Street's attention, what the latest Ethereum Pectra upgrade is all about, and what it means for our strategy, and where Bitcoin, stablecoins, and the big macro trend fits into this story. So let's get into it. Happy Monday, by the way. Thank you for joining me today. And of course, if you haven't subscribed already, I'd ask you do, just so that you keep up with my newest content. And of course, it encourages me to keep coming to you every single day. And then most importantly, I'd say share this with a friend or family member that doesn't know what's going on in the crypto world, who thinks it's too complicated, because it is my goal to make this as easy as possible to understand. So always do leave me your feedback or commentary so I know how to improve for you. But without further ado, let's get into today's video. So first, let's talk about where the real money is moving in the markets. Let's talk about the macro big picture, because it's always so important to go over it, as it sets the tone and the context of where we are in the world right now and what the weather, so to speak, that's how I think of it, as the weather is outside, because this always then informs or affects the crypto market, because they're very much so correlated and still pegged. But all right, so what is the macro situation right now? Well, the US stocks got a bump this week after some positive China trade news. Behind the scenes, though, foreign investors have started unloading or selling US equities faster than they have in years. The reason comes down to the math. The US federal debt topped $36 trillion, a new record. And to pay for it, the government needs to sell more than $10 trillion in new treasuries this year. That's more debt hitting the market than ever before. And global buyers are starting to get cold feet. As a result, the 30-year treasury yield just closed at 4.97%, a level we haven't seen since the financial crisis. Safe havens are looking shaky. Meanwhile, China is adding to its gold reserves for the 7th month in a row, shifting billions away from US assets. So what happens next? Well, for the first time, crypto, can we get a drum roll, has reached a historic moment. It's finally mature enough, or big enough too, and liquid enough to soak up the capital that's leaking out of the old financial system. We're seeing new demand pour into everything from Bitcoin ETFs to stablecoins to Ethereum, all of which sets the stage for a major rotation that most investors still haven't noticed yet. So if you're here, congratulations, because you're hearing it and becoming aware of it sooner than they are. Now let's zoom in a little and let's look at the key movers in the crypto space and some key events affecting our crypto market at the moment. Right now, there's this buzz, okay? A lot of talk and buzz and excitement about Tether possibly going public, doing their IPO at a $500 billion valuation. And even though it's just talk for now, the fact that serious people are discussing numbers, that shows how big, how massive stablecoins have become. And at that size, if this happens, Tether will take its place up there with the world's largest financial giants. Next, Gemini, founded by the Winklevoss twins, has actually filed for US IPO. This is one of the first major moves we've seen since Coinbase and Circle hit the public markets. And every listing like this brings a big signal of credibility boost to the industry. So what's the impact for Bitcoin and crypto? The speculation around Tether's potential IPO and the real IPO filing coming from Gemini are shining a spotlight on the scale and legitimacy of crypto's infrastructure. Stablecoin supply actually just hit a record of $240 billion, with Tether making up more than $112 billion. That's a huge pool of digital dollars, ready to move into Bitcoin, Ethereum, or DeFi, decentralized finance protocols, at any moment. More importantly, though, what all of this news is actually telling us is the fact that IPOs open the door for new capital, mutual funds, pensions, big institutions that previously had no way in. Public companies have to play by stricter rules, which means more trust and transparency for everyone. Even if the Tether IPO is just a conversation, it's a sign of how quickly the bridge between traditional finance and the crypto sort of Web3 future of the world in terms of finance, and how they're bridging right now and how their bridge is being strengthened. Next, let's press in a little deeper into interpreting what all of this data means, because the numbers, they tell us a story. Spot Bitcoin ETFs now hold more than 1.2 million Bitcoins, worth about $132 billion. Last week alone, ETFs absorbed over 10,000 coins, while miners produced only 6,300 Bitcoins, which is all nearly as many coins as are getting locked away are being created. At the same time, major exchanges are down to less than 2.7 million Bitcoins, which is the lowest level since 2018. Coins keep moving off exchanges and into cold storage in ETF vaults, tightening available supply on exchanges, all of which tells us people are not interested in selling or trading their Bitcoin. They're hodling, which removes the amount available in the open market and increases the value of Bitcoin. Institutional attention is pouring into Ethereum as well. BlackRock just added over $50 million worth of Ethereum in the last 10 days. On-chain records show massive single wallet transfers, and Ethereum ETFs continue to break records, with 15 straight days of net inflows, adding over 900 million during that streak. Ethereum's momentum isn't just about money flowing in. The network itself just got a major boost from the Pectra upgrade I was telling you about in my intro. Since going live, transaction costs for rollups, think Base or Arbitrum or Optimism have dropped down. They've dropped from about $16,000 a day to less than a penny. That makes it radically cheaper for layer 2s to operate, so networks can process thousands of transactions for pennies instead of dollars. That's a huge unlock for Ethereum's long-term vision of scaling and low fees. After Pectra, daily usage of these blobs, that's what they call them, which help store and move data efficiently, jumped by over 30%. Base, for example, is already seeing big benefits with high speed and low cost transfers. The upgrade is so effective that rollups still haven't hit the new capacity limits. The real game changer is how affordable and fast Ethereum's ecosystem is becoming for users and developers alike. There is some pressure on smaller validators as well. since cheaper data means more for them to process. But many are joining larger operations to keep the network running smoothly. Interestingly, though, some experts believe this could even help further decentralize the network, not weaken it. All of this means Ethereum is delivering on its promise. Faster, cheaper, and more scalable than ever. That's a big reason why institutions and long-term holders are piling in right now. And as we reviewed, stablecoins now account for $240 billion in liquidity, with Tether at $112 billion. This digital cash is ready to move instantly into any part of the crypto ecosystem, providing unmatched firepower for DeFi, NFTs, and spot trading. Adoption is accelerating on every forefront. BNB Chain processed 10 million transactions this week, making up to 70% of all DEX trading. Hyperliquid saw $250 billion in trading volume for May. And Coinbase Layer 2 Base has over $1 billion in active loans. On the price forefront, Bitcoin is holding above $100,000. Buyers keep stepping in on dips, and sellers cluster near 112,000. Ethereum's share of the market is rising as well, often the first sign of an altcoin season brewing or about to kick off. Leverage is increasing, but we're not at 2021's fever pitch yet. So there's still room for major moves as new capital keeps arriving. The bottom line is this: supply is tight, institutional demand is growing, and crypto has more liquidity waiting on the sidelines than ever before. These flows and fundamentals are what put you ahead of the crowd, understanding what's fundamentally happening. Now, all of this said, let's put it slightly to the side a little bit. Just remember it, but let's hold it to the side. How do you and I make the most of this situation right now? Well, it's simple. We have to focus on what we can control. That's where dollar cost averaging comes in. In a market that's moving this fast, the smart strategy is often the simplest. That's why so many pros and long-term believers use dollar cost averaging, or what's known as DCA, or DCAing into Bitcoin, you may have heard people say. The idea is easy. You set a fixed amount, let's say it's $100, or it can be less, to buy Bitcoin, Ethereum, or any high conviction, hopefully only blue chip project or token on a regular schedule. Some people buy every week, some people buy every month when they get paid, some people buy every day. The price might be high one week, low the next week, but you keep buying, you don't care, you stay nice and steady, no matter what the headlines say. And here's what this actually does for you. When prices dip, your money buys more coins. When the prices surge, you're still stacking. You don't have to think about it, but your average cost is smoothed out. And over time, you take the stress out of trying to buy the bottom or buy the dip. You just keep building your position, brick by brick, no matter how wild the swings get. The real edge with DCAing is consistency. You never have to guess, and you never get frozen by fear or FOMO. It's not about timing the market. It's about building over time. Most exchanges will actually even let you automate your buys so you don't have to think about it. Volatility just becomes your friend, because they do say, if you are a trader, that the best traders are non-emotional. So this strategy is even good for you if you're a trader, because while you're building your position week by week, it pays to keep an eye on the bigger picture, because macro events can shift the landscape fast. This is one of those weeks where the headlines can actually move the market, and you don't want to get caught up in all of that, the waves of emotion and fear in the market. You want to stay nice and steady. As I was saying, this is a big week for macro. On Wednesday, the Consumer Price Index lands. That's the official scorecard for US inflation and the cost of living. If inflation runs hot, markets can get jumpy, and the Fed may keep rates up for longer. Thursday brings the Producer Price Index, which shows which businesses are paying behind the scenes. And if this number jumps, expect higher prices across the board soon. And on Friday, we get a look at consumer price sentiment, the big mood check for American wallets. Confident consumers, we know, tend to spend. When they get worried, markets can feel it. All of this building up to the next Federal Reserve meeting on June 18th. A single hot inflation print can shift the mood overnight. For crypto, that means more volatility and more opportunity for those who are ready. So in closing, guys, we are living during moments where the walls of the old system are finally coming down, with BlackRock moving millions of dollars into Ethereum in just a few days. It's clear the biggest players on Wall Street are moving early, and they're looking at the same signals we are. So staying in tune with the news is our edge. Traditional finance is searching for the next safe place to park capital. And crypto rails, exchanges, and protocols are finally strong enough to handle the flow. What you and I do during weeks like this, set us up for the next big move. So my hope, my desire is that you stay sharp, you stay humble, never feel like you know exactly what's going on. That's why the DCAing investment strategy is so good, because you don't have to know exactly what's going on. You just know you're buying. No matter what the rest of the world is arguing on TV. Do not give in to fear. Do not be taken or swayed by what you see on TV. It's very simple. There's only ever going to be 21 million Bitcoin. So much of it is lost or locked up. The rest of it is being bought in the millions of dollars by people like Strategy and different institutional funds and entities like BlackRock. So all you have to do is keep buying Bitcoin. That's it. It's so simple. This is how legends are built. This is how fortunes are made. It's not by guessing through the headlines, but from building smart habits and getting in early. So to wrap it all up, guys, okay, today we broke down why dollar cost averaging is so important, especially with fundamentally projects. If you're looking for where to start, I just ask you take a quick look at my recent deep dive on Chainlink. I'll have it linked here next. And we're going to be getting into other ecosystem gems, many of which I've mentioned on my channel before. And then, of course, if you gain value from today's video, just like the video. It means so much to me. Share it with a family member or friend that needs to hear this. And of course, subscribe if you haven't. And I really hate to remind you every time, but I have to, because I know myself, sometimes I love different content creators, but I just won't subscribe. I just won't think about it, you know? But it means a lot to me and to us. So if you haven't, or if you have right now, thank you. Anyway, happy Monday once again, and I'll catch you in my video tomorrow. Ciao, guys.